Hey everyone, welcome to Turn My Coin YouTube channel. We help you make loads of serious money by educating you about Bitcoin and cryptocurrencies so you can make informed decisions before investing in cryptos. ICO or initial coin offering is a way to raise capital for new cryptocurrency projects. ICOs often aim to seek and gather voluntary financial contributions for investors. In layman's words, the initial coin offering of a cryptocurrency is similar to an initial public offering of stocks. Well, for practical purposes at least. The process of investing in an initial coin offering, ICO, isn't a hard nut to crack. The following video will help you have a complete idea of ICOs and their framework. So, let's dig in. An ICO relates closely to the fundraising concept. It is inclusive of the venture selling new cryptocurrencies to public investors to raise capital. Investors, in return for their monetary commitments, receive cryptocurrencies. It can be considered a win-win situation for both the project developers who get funds to develop, run, and market their projects and for investors who can make multifold profits while exiting the project over time. Recommendation: though ICOs can be very lucrative to investors, one must understand that they are very risky. ICOs are unregulated as most countries still don't have concrete guidelines to tackle them. Therefore, insurance of investor funds is not possible. Before we head forward, please like and subscribe to Turn My Coin channel to help us keep the content updated and provide you with more educational videos. A number of cryptocurrency projects have been successfully launched through ICOs, resulting in both investors and investee gaining from the launch. Few known examples of the same are Ethereum. Ethereum ICO fetched project $18.3 million in 2014, and we all know how much a unit of ETH values today for an investor. Brave, a web browser, could raise $35 million in under 30 seconds. All thanks to ICOs. Filecoin raised $257 million, and out of this $200 million were within the first hour of their token sale. Apart from ICOs, coins can even be mined. Let us now see what the different types of coin offerings are. What are the different types of initial coin offerings? Types of initial coin offerings. On a broader level, ICO can be categorized by type of market offerings like private ICOs and public ICOs. However, they can also be categorized based on the ICO implementation criteria. Let us first understand the former one first. Private ICOs. As the name suggests, private ICOs are open only to a restricted set of investors. This set comprises venture capitalist firms like Pantera, Fenbushi Capital, and Alameda Research, financial institutions, and high-net-worth individuals. Public ICOs. Public ICOs can be compared to crowdfunding where funds are raised from the general public, people like you and me. It is a more attractive way as it automatically markets the project before the final investor. However, with tons of scams and criticism of public ICOs, most cryptocurrency project developers like using private ICOs to raise initial funds. Categorization based on implementation criteria, structure. Fixed number of tokens and fixed prices. This is the most common ICO type wherein the project announces the total number of tokens and prices of the crypto investors beforehand. Fixed number of tokens and dynamic prices. An ICO may have dynamic funding requirements but a fixed number of tokens. Hence, the total funds received decide the overall prices of the token. Dynamic number of tokens and fixed prices. More often than not, projects may fix the prices for tokens. Those willing to buy the token at that fixed price may participate in the ICO. Here, the total number of token offered are flexible. It is like deciding a reserved price for the sale. How to evaluate an initial coin offering. 1. White paper and website. As an investor, you need to gather as much information as possible to make sure that your funds are invested in the right ICO. The best source of information in my view is the white paper of the project and the website. There are too many rumors and unvouched information available on the market. You should look for two things. Firstly, that the information is correct, and secondly, the information is complete for you to decide. Accordingly, the white paper and website of the project should contain a description, goals, tokenomics, and roadmap. Further, a good glance at the social media handle can provide you with information about how others are responding to the project. Moreover, they keep you updated about the recent advances in the project. 2. Innovative project. One needs to have confidence in the idea of the project. Innovative projects are more likely to succeed. A replication, unless it is accompanied by an advancement, may not do that well. 3. Terms and conditions of the ICO. Many projects have a lock-in period for investors before which they cannot trade their investment. If you are looking for a quick exit, you may need to check this condition. Likewise, government regulations play an important role when you invest in an ICO. 4. Ensure the safety of your funds. You should make sure that your funds are lying in safe custody post-completion of the ICO and are used in the promised manner. Accordingly, please make sure that the funds are stored in escrow accounts and that provisions for independent audit of the utilization of funds are there. Advantages and disadvantages of initial coin offering. The launch of an initial coin offering comes both with its pros and cons. Firstly, let's have a look at some of the reasons why you would give yourself a pat on the back after investing in an ICO. Advantages of investing in an initial coin offering. 1. Abundance of liquidity. One of the key advantages of investing in an ICO is that it allows for the liquidation of new tokens. It exposes the crypto project to the high availability of a large sustainable audience. 2. Less entry barrier. Under an ICO, almost everyone gets authorized for the funding. 3. Decentralization. The often decentralized nature of crypto projects under an ICO allows peer-to-peer transactions to be carried out in a distributed ledger. Hence, the investors and firms can deal directly with each other. Consequently, this way one doesn't need to communicate under the shadow of a centralized exchange. 4. A good initiative for raising funds. Firms that register themselves for getting these funds are readily approached by potential investors. Once the ICO goes live, businesses need to invest in PR and marketing, and the project is backed by investors' contributions. Disadvantages of investing in an ICO. 1. No regulatory mechanism. Initial coin offerings aren't regulated. The public authorities have zero to no say in the proceedings of an ICO launch. Therefore, it becomes prone to a high risk of frauds and scams. Adding a bit to it, most countries are in the nascent stage of drafting regulations. Therefore, insurance of investors' funds is a far-sighted possibility. 2. Low success rates. In today's era, there is high competition in the crypto market. So, if someone is struggling to find success in the crypto world through traditional methods, sadly they may soon dry out of funds. 3. Investors don't secure any stake in the crypto project. If you are someone willing to contribute to an ICO project, then this may not be something you should eye for. Putting your money into one will not fetch you any stakes in the company or the crypto project. Likewise, you can only buy or sell the received tokens. Investment is initial coin offering has given good returns to investors. They are a win-win for both developers and investors. Having said that, it is important that you do your due diligence before investing in ICO, as many turn up to be scams. Hope you liked the video. Do drop in your questions and feedback in the comments below. For more educative videos on Bitcoin and cryptocurrencies, subscribe to our channel Turn My Coin. Until next time, keep minting loads of money.